Today's Animal Spirits is brought to you by our friends at YCharts. We're going to get into this today, but Elon Musk, now Lord Edge, I guess, tweeted this past weekend, much is made lately of unrealized gains being a means of tax avoidance, so I propose selling 10% of my Tesla stock. Do you support this? More than 3.5 million people voted. The yeses won, 58%.
Oh, interesting. You voted yes. I voted no.
I want to see carnage. So I looked this up on YCharts. I put in Tesla. I tracked their 30-day average daily volume. And one of the cool things on YCharts you can do is add certain things like that I always add in. You can annotate the chart. So you can add a min, a max. You can add recession bars. And I just added the average here of their 30-day average volume. And so it's like 21 million on average. And I think that average is probably a little skewed by the March 2020 because this is over the past 3 years. Regardless, I found there was a few different places that said how much Elon actually owns. I saw one said he owns 170 million shares, one said 190, one said more like 230. So I'm going to go with the highest one just because who knows with options and stuff. Selling his 10% stake would be almost 23 million shares. So he wouldn't sell it all in one day, but he'd be selling the average daily volume in Tesla shares over the past 3 years.
I actually think he sold it Monday morning in the pre-market.
Did he already? Okay, so Tesla finished the day on Monday down only 5%. So if he was able to pull this off, that's not bad, right? That's pretty impressive. You sure he sold the whole thing?
I was in the pre-market. No, Ben, it was a joke.
Oh, you're joking. Okay, I thought you said okay. I missed that. Oh, anyway, all right. One more chart from YCharts. I didn't have my coffee for the entirety of my life. Tesla's percentage of shares outstanding short, we've looked at this before, it was from 2012 to 2019, around 25% probably average. It's now dropped down to 3%. Can you imagine being one of those people still in the 3% shorting this thing? Anyway, if you'd like to annotate your own charts like we just did, go to ycharts.com, tell them Animal Spirits sent you, and get 20% off when you sign up for your first subscription.
Welcome to Animal Spirits with Michael and Ben. It's our 4-year anniversary.
Oh, really? What'd you get me? What's a 4-year podcast anniversary? Diamonds? NFTs?
I don't know. Yeah.
Bitcoin?
So, Tale of the Tape, we're pushing 11 million downloads. Not bad.
We'll take it.
What did we learn?
Well, we learned how to talk, first of all. We didn't really know how to do that very well at first. Harder than it sounds. I grew an appreciation for radio DJs by becoming a podcaster. I think everyone says this, but do you hate the sound of your own voice or not?
Not anymore. I've learned to love it. No, I'm kidding. I definitely don't love it, but I mean, I'm a listen, I'm a fan. I'm a listener. I listen every Wednesday because like you with the kerfuffle that just happened with you missing my Tesla joke, we miss each other's jokes all the time. Right, because we're thinking about what we're going to say next. So I'm a fan.
We're Wayne Gretzkying this thing. We're going to where the puck is going to be. Now we're going to where the puck is going to be. We're thinking in our head the next hot take we're going to give, and so sometimes we miss jokes.
Right,
it happens. That is a long time though. We miss one. We said we missed 1 week in 4 years. That's not bad.
But you know what? You know what's still happening? We're still having technical difficulties. Are we not?
96% of the time it's your fault, but yes, we are.
And you know what I'm about to do? I'm about to throw in these really crummy headphones because my AirPods are dying. So bear with me.
Insert GIF of Owen Wilson and Ben Stiller hitting the computer in Zoolander.
All right.
Good?
Talk.
Okay.
Yep, much better.
So the market assumes the pandemic is over. So this is through last week, so pretty close. But Live Nation, this is over the past year, up around 120%. Planet Fitness, where I used to go to work out, not to brag, up about 50%. Zoom Video, down 44%. Peloton, down well over 50% over the past year. I know a lot of people have already themselves assumed the pandemic is over, even though we still have a lot of cases, people still dying. The stock market has assumed it's over, right? I think that the nail in the coffin the stock market has said, Scott Gottlieb on CNBC said he thinks by January, this pandemic may well be over. at least as it relates to the United States after we get through this Delta wave of infection, and we'll be in a more endemic phase of this virus.
We've said it before and we'll say it again. The stock market did a pretty good job skating to where the puck was going. The stock market was Wayne Gretzky.
Yes, Wayne Gretzky, Michael Batnick.
And I tried to be the goalie and failed miserably.
Why? By being
Did
bearish?
I take this analogy too far?
Yeah, a little bit.
All right.
The interesting thing to me, the stock market continues to hit all-time highs. The S&P is up 25% this year. And it's been a very easy year.
What was it up last year?
18% last year.
And 31 the year before that? Let's keep it going. Why can't stocks go up 20% every year? Why not?
Well, here's the thing. I say this before. The stock market goes up 20% in a given year more often than it falls in a given year.
That's wild.
You're more likely to have a 20% gain than a negative return in the stock market going back 100 years.
But what about Japan?
Well, all right, here's something that's interesting. The stock market is rocking, but there's companies getting crushed all over the place. Zillow, we talked about, we're going to talk about this later, was down 50%, then fell 25% after earnings. Peloton was down 50%, fell 20% after earnings, 25%. Penn Gaming was down 50%, fell 20% after earnings. I think we were wondering when this would happen, right? Like, what would be the cause of some of this? There's too much excitement in some of these stocks. It's pulled forward too much.
Well, maybe
it's happening.
Maybe you haven't been paying attention because stocks have been getting crushed all over the place. Individual stocks. The stock market, the S&P 500 has been fine, but there's been stocks getting killed all over the place. Look at this chart from, I forget.
Some people would say the stock market is a market of stocks. I wouldn't say that. Some people would.
Look at this chart showing the performance of stocks after they miss earnings. Crushed. This goes back to 2011. Now, the quarter's not over. It's been a bad quarter, guys. We'll get into that. But the stock market is not taking kindly to those that miss.
Okay. So what would it take for Tesla to actually fall? Because obviously,
if Elon sells 150% of his shares. By the way, was funding secured at like $70 billion? Where was that?
It was a long, long time ago.
And so, Tesla was down 5% yesterday, wherever it closed, to just 1.1 trillion.
This guy is a world-class troll, right? So he does stuff like this. So you get, either way, you have people saying he's brilliant or he's an idiot, right? Because the people who say he's brilliant say, oh, look, Elon Musk is going to pay taxes. And the people say he's an idiot say, no. Elon Musk has taxes that he has to pay.
Can I make a prediction? You're right down the middle on Elon Musk. You don't feel any certain way.
No, I think he's a charlatan who's also the wealthiest man in the world.
Who's also what?
The wealthiest man in the world.
He's a
genius. He's a genius who's also a charlatan.
Okay.
That's where can we just, you recommended to me reading, I'm getting off on a tangent here, reading the Peter Thiel book, The Contrarian.
Excellent.
Wouldn't it be nice if we had an uber successful person these days that was a venture or tech person that wasn't a complete sociopath?
They're out there.
Are they? Doesn't it seem like to be one of these most successful people? I guess Bezos would maybe be the most normal-like person, even though it sounds like he's not the greatest person to work for. Would it just be nice if we had like a nice person who was also ultra successful?
Nice people don't run $1 trillion companies. You can't get that big and be nice.
All right. I guess maybe I'm just old-fashioned that I don't like people looking up to complete sociopaths.
How about this? You know who's nice? You know who's a nice guy? Jeremiah Lowen. Let's get that guy to $1 trillion market cap.
Sure. Okay. Anyway.
Nothing?
I mean.
Right. So speaking of, and it's been 4 years and I'm still saying speaking of. It's a very hacky move.
It happens. It's hard to get out of that stuff. So,
all right, so
CNBC said that he's facing a tax bill of more than $15 billion on stock options that are coming due. So that's why he basically has to sell.
So wait, you're saying that there's something else going on? He's not just letting the world decide?
But I mean, honestly, if Squid Game is really happening, Elon Musk has 75% chance he'd be taking part in it.
Oh, it's one of those dudes with the masks?
Right?
Yeah.
I mean, come on.
Yeah, that dude he's definitely into some weird stuff. All right, so Sam Bankman-Fried.
And he's probably gonna change the world. Like his push of Tesla into electric vehicles has pulled forward all of this from all these other car companies. And he's probably literally gonna change the world, and he's still a troll, which
Doug Bonaparte has this theory that I don't know if he's said this publicly, but I'll add him, that Elon is like totally Teflon, that he's got something going on with the government where like he has them by the proverbial you-know-what, and he could do whatever he wants.
Well, no, the reason he has the government by the you-know-what is because he's the richest man alive. He could pay any fine they ever set on it. Like, what are they going to do to him?
And I think that theory maybe showed true over the weekend when he tweeted to the head of the finance committee. Yes. Yeah, you could see the tweet. What did he say? What did he say?
I don't want to say it. I don't want to say it.
I'm thinking about, did he say what I think he said? I think he did. So anyway, Sam Bankman-Fried tweeted Elon when he tweeted that at what is that, Saturday, Sunday? I can't remember. Because my first reaction was, I want to see this. I want to see the price. What's going on with the stock? Sam Bankman-Fried of FTX tweeted, because traditional markets close on weekends, there's no way to get liquidity, risk management, or price discovery based on this tweet. Oh, wait, there is. So 24/7 stocks coming.
Yeah, it's inevitable at this point, I think.
The market is up a lot. A lot of the things that are up a lot are companies that are being valued on potential and hopes and dreams. And not just that, a lot of these companies are delivering, some of the expensive companies. But the Luthold Group has this great chart showing the number of S&P 500 stocks trading above 10 times sales. And we are so far past the dot-com bubble. We're basically double that number. And the S&P 500 median price to sales ratio also more than twice as high as it was in the dot-com peak. And I understand looking at this chart and squirming and saying this is going to end really badly. And for a lot of these companies, we're seeing that play out right now. But trying to use old metrics for new companies is probably not the best approach. Like trying to do valuation analysis on hyper growth companies in a world that looks nothing like it used to. Is it different this time? Yes.
This chart is an advertisement for software.
Yeah, exactly.
They might as well just say that software is, yeah. Okay, here's another thing that doesn't make sense. So the Fed announced a taper last week. They're going to stop buying as many bonds, I guess. They're going to stop trading insider trading their accounts. The labor market is improving. We'll get to that in a little bit. Unemployment rate's well under 5% now. Infrastructure bill was passed this week. I know that it doesn't all get spent at once and it gets parceled out a little bit in pieces over the years. The pandemic is getting better. The economy is chugging along. And then interest rates just continue to fall. 10 years at 1.45% as of this. And it's been falling in the last couple of weeks.
Since they announced the taper. And guess what? Dollar's still strong.
What will it take for interest rates to rise?
An act of God. I don't know.
Because people over the years have talked about how like bonds are in a bubble and shorting bonds is an easy bet here. I guess we are Japan in some ways with rates, where they're just never going to rise again. I don't know what else it would take at this point. 10% inflation?
I think this is there's a lot of stories in here, but I think it's mostly a demographic story. The demand for yield is just ridiculous. I don't know how it goes above. I don't want to give out a certain level, but yeah, I don't know how it rises materially. All right, let's talk about what we're about to do here. As we've mentioned on the podcast before, we have been working with Quartr, the app, Quartr. We invested, and we were going to do 4 quarterly podcasts next year where we review earnings season. What do we learn? Big trends. But we're not going to do it that way because earnings season is too long. Too many things happen. It's going to get stale if we waited. It would be too much work. So what we're going to do is during earnings season, we're going to do a segment that we call Great Quarter Guys. And we had in the doc a place for this that we called Company Specific. Basically, we're swapping out that name. We're calling it Great Quarter Guys. And we're going to discuss some of the earnings calls that we've listened to over the past week. And on today's episode, we're going to discuss Zillow, Peloton, Airbnb, Shake Shack for a second, and maybe AMC. We're going to try and move fast. There's a lot going on.
We've listened to. In full disclosure, this was in CNBC that we have made an investment in this company. We're trying to help them.
Ben didn't make the cut. I don't know what happened there.
CNBC cut me out. I think someone at CNBC has a grudge against me because they cut me out of the release. No Ben Carlson mentioned at all. I feel slighted. So Zillow's the first one we have to talk about because we've talked about this a lot.
Wait, before we talk about this company specifics, do you want to talk about how to listen to an earnings call?
Wait, so someone actually asked us this on Twitter. How do you listen to earnings call? And we're not experts at this because we don't do this all the time.
I'll say this might be the blind leading the blind, but let's try.
Here's my assessment. First of all, one thing you have to remember, I used to work for sell-side analysts. It was my first internship I ever had. And these analysts, these are the ones that follow the companies and industries, and they are the ones who ask the questions on the calls for the most part. These analysts have to kiss the asses of the company management because that's where they get their information from. So you have to understand that they're never going to go that hard at these people. So if they do pry a little bit, and this happened in the Zillow call where they're like, wait a minute, you are kind of singing a different tune than you were last quarter. But they say it in a very nice way. Like that's a huge red flag, I think, from the analysts if they just pry a little bit. So that's one thing to understand.
You know who goes in a little? Rich Greenfield.
Okay, that makes sense. I think it also helps us to listen to multiple calls to see how the narrative changes. Because I listened to the last 2 Zillow calls before this one, and you could hear between the last call and this one, it was a totally different. I mean, it was a huge pivot away, like the stuff they said in the previous. So I think that helps too. Obviously, the Quartr has the Q&A button. I think skipping unless there's a huge announcement, just skipping the stuff that they read that you can probably read in the letter anyway, and going right to the Q&A helps.
I didn't skip the Zillow one because I wanted to hear Rich Barton speak.
That was the same for me for this one because it was a big announcement.
And what about the transcript? The transcript is huge because oftentimes a lot of the canned stuff that's pre-written, I want to listen to some of the before the Q&A, but not all of it. So if you have the transcript open while you're listening, you can easily skip ahead.
So the Zillow one we both listened to, and there was a lot written about this last week. We've talked about it a lot too, the iBuyer thing. And remember a few weeks ago we had someone say, listen, if and when Zillow gets to scale, this could be an amazing business. I think Zillow kind of admitted getting to scale is really difficult, and especially with our model, it's probably never going to happen. There were some things that were frankly shocking to me, how they were going about this. Their pricing model was trying to forecast housing prices 3 to 6 months into the future, which is that how like most house flippers work? You think the way you do it is you find a house that's relatively decently valued, you fix it up, you clean it up a little bit, put some paint on, new carpet maybe, and you sell it for a little more, and you have scale because you have relationships with these contractors and you don't pay as much as you can sell it for the upgrades. That's kind of my thought process of house flipping. It doesn't seem like that was what they were doing at all.
Well, the other thing that we learned is that, and we heard this from listeners, is that they were just buying indiscriminately. And I wonder if this is an incentive problem where the Zillow employees that were making these purchases had no skin in the game. And so their job was to buy houses, so they bought houses, right? But for example, that one email that we got where the house was unsellable because the big dog barking in the backyard, they couldn't sell the house. And Zillow came in and was like, boop, boop, boop. Yeah, we'll take
Hercules, though, right?
Hercules.
We totally
I called him
missed that
Zeus.
one.
Yeah, Hercules. So examples over and over like that. So Rich Barton said, put simply, our observed error rate has been far more volatile than we ever expected possible and makes us look more like a leveraged housing trader than the market maker we set out to be.
The other thing that I thought was interesting, he said, we risked alienating our current clients. He said 90% of the people we made an offer to turned us down. And like we thought we were maybe breaking that relationship we had with them. Because they said they still bring in like 230 million unique visitors to their website a month. This thing is still an enormous brand that people love to check their houses or look for other houses.
So 90% of people turn them down. Is that because the whole premise of the iBuyer is that they just make it much easier to sell your house? Selling a house has never been easier.
Right.
Given everything that we've been discussing for the past year.
Right. Maybe more people wanted to have people outbid each other instead of having just a number.
So was this the worst possible environment for Zillow? Could they have been successful?
I also think so. And I think Mark Andreessen has talked about this. There's 3 places where technology has had a hard time making things more efficient. 1 is healthcare. 2 is education. I think a lot of that is because the government is heavily involved in both of those industries. But 3 is real estate, right? Like there hasn't been a technology company who's been able to come in and chip away at realtor fees over time. There's still 5 or 6% for the most part.
Do you think Open Door is a shot?
I think they're probably going to be more of a niche player than a get to scale. That'd
But
be
this is all Open Door focuses on. Whereas with Zillow came in late, tried to copy. This is one of their half a dozen business lines. What Rich Barton said was, before I close and hand it over to Alan, and this is what we were betting on with the turnaround. Like, I bought the stock down 50%. I sold it down 30%. I bailed right after earnings, and I'll get to why in a second. Rich Barton said, before I close and hand it over to Alan. So, sorry. Rich Barton is the founder of Expedia and Glassdoor and Zillow. So, all right.
Yeah, the guy running Zillow is very talented.
Yeah. Rich said, before I close and hand it over to Alan, I'd like you all to know how personal this is for me.
Can you say before I close and hand over to Alan one more time?
So I know, I'm sorry. I am founder and first money into Zillow 16 years ago, and I'm the largest individual shareholder. I'm sorry for how difficult and disruptive this will be. I am grateful to them, meaning his employees. They have worked hard and will be missed. We are committed to providing a smooth transition for those affected. So they're laying off 25% of their workforce. And Ed Borgato, friend of the show, said, the criticism Rich Barton gets will be deserved, as would the praise had he got it right. But give me the CEO who has the guts to exit a bad trade and face the market consequences over the one who won't.
Right. They pulled the plug on this very quickly, because obviously last quarter they were still kind of hopeful about it. So they decided, like, okay, we're going to lose even more here. We have to do it. And that's the fail quickly thing, right? That's what everyone in Silicon Valley wants you to do.
So McMurtry said something interesting, Super Mugatu. He said, Zillow shuttering iBuying is the first super popular bad thesis to play out in like 10 years. It actually ended badly. I forgot that was even possible. Just seemed like a thing people say before they lose money.
I think that's probably why so many people were dancing on their grave as they were falling and saying, see, we told you this couldn't happen.
Okay. So here's my thought process for selling. So as I wrote a post about this, what I learned being wrong. I already knew that trying to be a value investor with growth stocks is ridiculously hard, right? Like trying to say, okay, Zillow got cut in half. All of this bad news that we've been discussing is mostly in the price of the stock. I believe in Rich Barton. I believe in the team. I believe in the thesis, and over time they can turn it around. But I already knew that this was incredibly difficult, which is why it was my second smallest position. It was not a meaningful number. But when the next day I had two decisions to make, or two choices. There was a fork in the road, Ben. What was it down? 25%, 22%? It doesn't even matter. It was down a lot. I can either double down or bail. And I do think that the brand is strong, and I do genuinely believe that the stock will be worth more in 5 years than it is today. However, turnarounds are incredibly rocky. They take a long time. And the bottom line for me is, it wasn't just a financial decision like, oh, do I put more money in? I don't want to commit any more mental capital to this. So I was dating, wasn't looking to get married. I was wrong. I sold. No harm, no foul. Your thoughts?
See, I'm going to stay together for the kids.
So you're sticking with it.
I still think that my thesis is housing is going to remain strong for a number of years. I am hoping the brand helps, and if I'm wrong, so be it.
Okay, I want to talk about one more, and this is we spoke about this. I was debating whether I do this lest I look like an absolute moron and embarrass myself. But I'm going to talk about Peloton.
Credit to you for wanting to look like a moron and embarrass yourself.
Well, here's the thing: losses are way more fun to talk about than winners. So I had 7 stocks. Now I own 5 because Peloton was one of them.
On the weekends, you and I, when we're betting on sports, we share our losses with each other. We don't really brag about the gains. It's way more fun.
It's not fun. So I do have wins. I do have stocks that are doing phenomenally well. I don't want to talk about them because it's not fun.
Who cares?
Who cares? Exactly. There's a lot of stocks going up. I'm not a genius. So Peloton was literally my smallest position. Like absolutely immaterial. Same thesis. I understand why it was down 50%. Strong brand name. I think it could be the gym of the future. All that sort of shit. Obviously fell 30% on whatever day it was. And just to give you context for how small this position was, so Peloton was down 30%. I sold. My portfolio was down like 0.2% when I sold. So it was like truly and really a meaningless position. It was a starter position that if I could add to it and the tournament was there, whatever, it didn't materialize.
My thoughts on this one were always like, I still think their brand is strong. I am a user who thinks that it's a great product and platform. My whole reason for staying away from it when it crashed initially was because I think a lot of workout stuff is faddish. And yet this still surprised me how much they're down and how much people are like trying to just kick them to the side. I think it's a little over. Like Why wouldn't a company like Apple step in and buy them?
What's their market cap? I mean, it's below 20 billion at this point.
I don't know. I still think the brand is stronger, even though that this
so
stuff
credit to me. Credit to me. If you're going to buy growth stocks on the way down like an idiot, at least keep it very, very small, which I did because I already knew that this was unlikely to work. So what's funny, Ben, is that morning I was telling you, my neighbor, we said the kids together on the bus. My neighbor was talking about, he's like, what idiot would own Peloton? If you couldn't see this coming, you should never be allowed to own stocks. And I did that meme where the guy's like this, like the cartoon character. And okay, but again, credit to me, very small position. I was wrong. Same thing with Zillow. Do I think it'll be higher in 5 years? Yes. Am I willing to ride it out, commit more money, more mental energy? No.
This is what makes picking stocks both so enticing and so maddening, because these stocks both had Black Monday, like a 1987 crash in an individual stock when the market's at an all-time high. That's what makes this so difficult if you're going to be a stock picker. Like you said, do I get out or do I double down or do I hold? It's not easy, this stuff, because there are so many instances where stocks have gotten pummeled. Netflix was down 70% in 2012, right? And you look back now and say, why wouldn't you buy that? And at the time, it made sense.
Right. So we could same exact thing could happen with Peloton and Zillow. Yes. The story is still yet to play out, so we will be monitoring. But okay, so I lost a fingernail, whatever, no big deal, not even a fingernail. Zero Hedge tweeted Bally Gifford down $800 million on Peloton on the day that they reported earnings.
So they lost like all 5 of their toes.
Yikes. All right, so what happened in Peloton? So here's a quote. From forecasting consumer demand to accurately predicting logistics costs, our teams have never seen a more complex operating environment in which to guide our expected results this year. Basically, the growth has slowed dramatically. Riding has slowed dramatically. The treadmills, I don't think, are going very well. But you heard the same exact thing when I listened to the Shake Shack report, just the unpredictability environment. And I'm sure on every single earnings call, it was the same thing over and over again, how difficult it is to forecast right now. And navigate.
Yeah. Right. And this is one of the things that we're going to try to get from listening to these calls from Quartr is like, what are some of the themes that all these companies are looking at?
Inflation.
And I agree. It is more interesting, I think, to talk about these companies that are getting dinged than the ones that are doing amazing. Because the ones that are doing amazing, everyone's already bragging about them. Who cares?
Airbnb, for example, they just crossed 1 billion cumulative guests.
And so they
How
are
about
really...
this? Actually, hold on. So Airbnb was one that I wanted to buy when it crashed, and I just didn't. But sometimes buying growth stocks when they crash works. Airbnb did, right? The rebound has been tremendous.
Hand up.
Good for you. Same thing with Snow. Same thing with Unity. And other times it doesn't. Zoom,
right.
Peloton.
Yeah, Shopify came back. A lot of
Zillow,
these companies came back.
Yeah, so some do come back, some don't. All right, AMC just reported earnings. For the 3 months ended September. What are you going to say?
LOL, does the market care about AMC's earnings? It's a meme stock.
Yeah, no, but I just care about it from the movie theaters are dead point of view.
Oh, okay.
So, yeah, I don't care what the market thinks about AMC. It's not that thing's, let's say that's not trading fundamentals and leave it at that. AMC 3 months revenue ended September 30th in 2020 was $63 million. Obviously, it was basically zero. $425 million in 2021.
Okay, I've never looked at this before. The fact that their food and beverage revenue almost equals their, like, it's like 2/3 of their admission.
That jumped out at me too. So
so high.
So the revenue for admissions was up 7x from 2020 to 21.
Pretty sure that's all inflation though.
But the food and beverage is up 10x. And
Jeez.
I'm not kidding. That has to be inflation.
Okay, so what do you buy when you go to the movie theater by yourself? What are you buying for snacks?
I'm a popcorn Sprite guy, and that's almost the only time I ever drink Sprite. What are you, like Milk Duds or something super lame? No offense.
Yeah, something chocolate.
Chocolate.
Yeah, something like that.
Well, you don't go to theater, so what do you eat at home?
It's been a while.
Do you do popcorn on the couch?
I'm like a chocolate covered raisin kind of guy.
You mean Raisinets?
Yes.
Yeah. Good stuff.
Not bad.
All right. I spent some time over the weekend on OpenSea, playing around, NFTing, this, that, the other. And I was thinking, I don't want my wallet public.
What does that mean?
Like, so there are these accounts on Twitter that show like big purchases, big NFT purchases.
Oh.
And they show like big losses, big gains, all this sort of stuff. And it tells you like whose wallet it is, how much money they have.
Okay, so look at this new whale. He spent 0.5 ETH on something, and now it's worth 0.00001.
Exactly.
Okay. But you have no choice in the matter.
No. I mean, what you can do is you can have an anonymous account, obviously, so that people don't know who it is. And that's, I'm guessing, what most people do. But here's what I mean. Let's say that you tweet out your NFT because it's community. That's the whole point, is to share, right? Now somebody could find your NFT and look at your entire wallet. It's like you're naked. It's like, feels like very intrusive.
Okay. Can I just point out here?
Please.
I'm never going to wear a headset thing. Okay? So whatever happens with the metaverse, I'm happy. All the nerds are going to love it.
Don't put that sort of pressure on yourself. You don't. I mean, what if headsets become a thing? Like a really.
I'm
cool
laying
thing.
it out now. I will not be wearing a headset. I will be the one person who does not wear it. Like, if that passes me by and like my kids do it and everyone else do it, fine. I'm not going to wear a headset.
Ron Burgundy, I don't believe you. You probably also said that you would never wear AirPods.
Oh, I love AirPods from the beginning. I was all in.
Were you?
Like the Google Glass things, I'm sorry. I saw those right away and said, no way. The Snapchat glasses, the Facebook glasses, no, out. Sorry. Wall Street Journal had an article about the labor market, and we've had some people asking us, like, do you think this stuff is here to stay? Like, is this just like demographic story and people have changed their minds? And I think they're going to figure it out. This one surprised me, though. They talked about how companies are figuring it out, but they say this beauty product retailer, The Body Shop, is dropping educational requirements and background checks for job applicants. UPS is making some job offers as little as 10 minutes. CVS no longer requires college graduates to submit their grades. Can you imagine thinking that college grades mattered when hiring someone for anything? Like, what job has ever been... I mean, I get it if you're an Ivy League person, you get
That's
a 4.0 or whatever.
Point.
Who cares? Why would they ever ask for those in the first place? Like, so I think,
By the way,
these places are going to figure it out.
Did you see the tweet? Actually, you might have shared this with me. Somebody saying that NFTs are going to fix hiring.
Yes.
What?
I know. That's...
What?
I don't know. Okay. So Joe Wiseman, we talked last week about how, like, why does the Fed still have their foot on the gas pedal? And
credit to them. Credit to them. They're taking their foot off.
Yes, a little bit.
A little too little, too late. But
so he's talking about how like there's people who like might otherwise be at a job site or not because of childcare, and so they're saying they're committed to keeping it like higher than. And I think whatever you want to say about the inflation stuff, what the Fed has done, if you can credit them, it's working. So I think this is probably one of the best econ chart of the pandemic from Bill McBride that shows the percentage of job losses in post-World War II recessions. And we got down to 15%, which is way deeper than any other recession in post-World War II era. And you can see the blue line here is the one that started in 2007, took forever to get back to trend.
This is a wild chart.
This one is almost all the way back on trend from some of these tiny like downturns in the 80s and the 50s and the 60s. This is insane. And look at the unemployment chart. It's spiked to 15%. Now it's down to 4.6. We're almost back down to where we were. And look at how fast this happened. So
your theory about markets moving quicker and rebounds happening faster, I feel like that's going to happen more maybe in the economy than in the stock market.
Potentially, but for the people who complain about inflation and this is crushing us, would the alternative of 15% unemployment that takes 4 years to work out, would that have been a better alternative?
Everybody who we hear complaining about inflation has a job and would not have been affected by this pandemic, by this recession.
That's the thing. Like, yes, prices are higher and supply chains are kind of a mess, and it's made our lives more inconvenient. But there's also millions of people who now have a job that wouldn't have had one otherwise if we would have just let this thing work its way on its own.
All right, so this actually made me laugh when I saw this. This was on, I guess, CNN. Somebody said a gallon of milk was $1.99. Now it's $2.79. When you buy 12 gallons a week, 4 times a week, that's a lot of money. And then the replies are hilarious. Somebody tweeted, if you're going through 12 gallons of milk a week, it's time to invest in a motherfucking cow.
I guess this one was easy to dunk on, but it gets back to the point that we've been trying to make for a while, that inflation is personal. The stuff that you spend your money on, and if you're in one of these categories that's gotten higher prices, you feel it more than other people do in certain areas, and that's why people complain, because it doesn't matter what the overall CPI is, or it's what stage of life you're in and what you spend your money on.
And I saw that you actually wrote an op-ed for MSNBC why the inflation we're seeing now is a good thing.
I did see that. Yeah, unfortunately, yeah, that was obvious that someone was going to say that, though, right?
Yes, of course. All right, we spoke earlier about Zillow and incentives for the buyers, the employees doing the work. I want to talk about incentives for journalists for a second, because this thing went viral, the 12 gallons of milk thing. All right, so Jordan Wiseman, I forget where he works, I apologize, tweeted, if you want a sense of the dumb incentives policy journalists are facing at the moment, a few weeks ago, I wrote an article I was pretty proud of that correctly anticipated that the climate section of BBB was going to be shockingly strong, despite the demise of CEPP. I don't know what either of those things are. But then he said, it was ultimately one of the worst read pieces I've ever written in at least 4 years.
BBB is the Build Back Better infrastructure plan.
Oh, okay. Got it. Thank you. And then he wrote, last week, I tapped out a kind of dumb but fun article with some charts about the 12 gallons of milk discourse, turned into one of my top 10 articles of the year. And this is not his fault, but it's basically why the internet sucks.
Well, I think it's also why we suck as people, though, because we like to blame the internet and social media and politicians and clickbait and all this stuff. But guess what? We're the problem because we would rather read an article about 12 gallons of milk than something about an infrastructure plan that could help us in the future. So
good take.
It's the audience. We're the problem. We're the one who votes for these people. We're the one who
hand up. I'm sorry.
We're the one who reads this stuff. I'm sorry, but at a certain point, people love to talk smack about Facebook. There's 3 billion users of the product. Guess who the problem is? The users.
Right.
It's not the platform itself. It's the users.
Ben, last week
at a certain point,
when we were talking about transitory, you said something about like it's inflation then disinflation. It's not inflation then deflation. But actually, remember lumber? Remember that chart? Lumber saw inflation then deflation. Lumber crashed.
Isn't it still above where it was pre-pandemic, though?
Oh, that's point for me. I don't even know which camp I'm in this week, but point for me.
No, that was my camp. That's disinflation. It's still higher, but it's lower than the highs.
Okay. All right.
You just setting up a new camp with me? You want to shack up on my camp this week?
Let's bunk.
Transitory? All right.
All right. Dumb survey of the week. Very dumb survey of the week. Have you or someone you know quit your job at some point over the last year due to financial freedom earned by investing in cryptocurrency? 4%.
4% said, yes, I have. 7% said, yes, someone I know has.
So ipso facto, 11%, 1 out of 10 people aren't working because of crypto gains. I'm going to call bullshit.
I mean, did they ask like an NFT platform for this? It all depends on
they pulled CoinDesk users.
Right. I guess that's part of it. So speaking of, it's mostly young people, I'm sure, who have done that have become uber wealthy from crypto. The Wall Street Journal had this article about how rich millennials are not flocking to financial advisors, and they said, thanks for the golf invite, but you can't invest my money. We're probably guilty of this too. But how many advisors really find their clients on the golf course? Is that something people just say, like talking about your stocks at a cocktail party? Like, no one actually does that, but we still say it.
Yeah, it's a fair point. I feel like there's more golf. I feel like more business does happen on a golf course. No business happens at a cocktail party.
I just think this was kind of an unfair dunk on golfers, even though I'm not a big golf person. But they said, here's another survey, 70% of households with a net worth of $500,000 or more, headed by a person under 45, had an investing style that was either strongly or mostly self-directed in 2019, up from 57% in 2010. Basically, it's saying young people aren't going to go to advisors, and a lot of these people that they profiled in here said, well, the advisor doesn't do crypto, they don't do startups.
Why would young people go to an advisor? It makes no sense.
Yes, here's the thing.
Given today's environment, why would a young person use an advisor?
Yes, and the thing is, sometimes people just aren't ready for a financial advisor or don't need one, and some people, frankly, never will. But a lot of times, like, it gets to the point where the money becomes overwhelming, or you just have financial planning and tax issues you need to work through. Sometimes you make some mistakes. Sometimes there's like a huge life event. But
young people have none of those things.
Yes. So obviously there are advisors out there who cater specifically to millennials, and that's their whole shtick, and that's fine. That's helpful. But sometimes some of these millennials that are rich, like, aren't going to want or need an advisor for many years now.
Now we're also painting an entire group of people, young people with a broad brush. What I'm saying is the people that are on Robinhood, that are in crypto, that are crushing it, don't need a traditional financial advisor. They don't need one. They don't want one. Everything they're doing is working fine. They have bigger responsibilities, no need for financial planning. They're young, they're working, they're having fun, they're taking risks. Cool. But there also are young people, and I don't know where you draw the line at young, that aren't trading all day, that do need financial advice, that do need help with the basics, 529, 401k funding, and those people are using advisors. So you can't say yes, they are, no, they aren't. But the people that are on Robinhood trading don't have any use for an advisor, nor should they.
They wouldn't want to use what the advisor is going to tell them, which is more reasonable advice. And I knew an advisor back in the day who told me that he had an hourly financial planning business, and he would have clients come to him, and some of the clients, he would just say, "You're not ready to work with me." And the clients would say, "What are you talking about?" And he'd say, "You have to go out and kind of learn more for yourself before you," like, some people just are never going to be ready.
Dude, when I was 25, I was literally trading the triple levered inverse bearish ETF. I knew about index funds, but if I went to an advisor and they tried to put me in an asset allocation portfolio, I would have said, "Go, you know what?" I would never have listened.
Right. And a lot of young people want their hand in the steering wheel, and then you get older and you go, "I have better things to do with my time. I want someone else to be there to help me make these decisions."
Yeah, I got it out of my system. I get it. I had fun, but now I have
guess what?
Job, responsibilities, kids. I don't have time for this.
Just like people
the stakes
thought,
are too large, etc.
People said millennials are never going to buy homes after 2008, after the crash. They'll come around eventually, just like everything else.
Yes, they will.